Welcome to the Insight Sphere. So, in this video, we will explain the support and resistance levels. Actually, support and resistance level can help traders gain extra insight into the strength of a price trend. So, in this video, we will try to define support and resistance level and how to identify and draw both lines on a trading chart, which will ultimately show us a price trend. So, support and resistance are two terms for both two respective levels on a price chart that appear to limit the market's range of movement. The support level is where the price regularly stops falling and bounces back up, while the resistance is where the price normally stops rising and dips back down. The level exists as a product of supply and demand. If there are more buyers than sellers, the price could rise, and if there are more sellers than buyers, the price tends to fall. The more often a price hits either level, the more reliable that level is likely to be in predicting future price movements. It often happens that both levels become psychological barriers for traders, as they tend to buy or sell once a level is reached. This only strengthens the results. If a price touches or breaks through a support or resistance level but jumps back fairly quickly, it is only testing that level. But if a price breaks through any given level for a longer period of time, it is likely to keep rising or falling until a new support or resistance level is established. So, the question is how to identify support and resistance levels. Actually, there are few ways to identify support and resistance level. It's quite easy to spot these levels, but they can be very useful in helping you choose the best time to enter a market, as well as where to put your stops and limits. To identify support and resistance level, traders can look at those points. First one is the most reliable source for identifying support and resistance level is historical prices, making them invaluable to traders. The key is to familiarize with yourself with past patterns, sometimes from very recent activity, so you can recognize them if they appear again. However, it is important to remember that past patterns may have formed under different circumstances, so they are not always a reliable indicator. Number two is you can use previous notable support or resistance level as markers for possible entry and exit points, as well as indicators of future movement. It's important to note that major support and resistance level are rarely exact figures. It's unusual for a market to hit exactly the same price time after time before reversal. So it's probably more useful to think of them as support or resistance zone. Third point is technical indicators or trend lines, such as the ones covered later in this video, can provide dynamic support or resistance level that move as the chart progresses. Supports and resistance level for different markets will often be based on different factors. So, developing the ability to recognize which levels are going to impact the market price can take time. For that reason, it's important to practice identifying support or resistance level using historical charts. So let's know how to draw support and resistance lines. Actually, to draw support and resistance lines on a chart, you first have to find them by using one of the following methods. Number one is peaks and troughs, support and resistance level from a previous time frame. Third one is moving averages, and the fourth one is trend lines. These are covered in detail in the coming section of this video. To establish the strength of the support and resistance level, you can combine these methods. So what are peaks and troughs? To draw your lines using peaks and troughs, select your time frame, then identify the highest peak on the chart and do the same with the lowest point. Mark each peak and trough. If there's a downtrend, The support level will be lower low peak and the resistance level will be a lower high peak. Conversely, if there is an upward trend, the support level will be the higher low peak and the resistance level be the higher high peak. So if you are using support and resistance levels from a previous time frame, choose a short time frame, for example 15 minutes, then draw the levels from 1 hour and 4-hour time frames on the 15-minute frame. If the levels from the longer time frames are very similar or equal to the levels from the shorter time frame, these could be considered strong levels of support and resistance. Now come to the moving averages. The moving average indicator is another way to identify support and resistance levels and draw them on a chart. With the indicator enabled, draw a diagonal line from the highest peak to the lowest peak to see which way the trend is moving. If the trend line moves up, this moving average line will act as a level of support and vice versa. This is called dynamic support or resistance because the levels are consistently changing. So, what are trend lines? If you are using trend lines, make sure you have at least 3 peaks or 3 troughs before you draw your lines so that you have a usable trend line. Then once you have plotted the trend lines onto your chart, your uptrend line will be support level while the downtrend will be resistance level. As with moving average support and resistance level, these levels are dynamic. One thing should be keep in mind, it is important to combine one or more of the above methods to establish the most accurate support and resistance levels. So let's talk about support and resistance trading strategy. Using support and resistance level as a trading strategy is one of the very basic methods of trading. It can be used to manage risk and place stops, determine the market conditions, and find appropriate entry and exit points. The most common trading strategy using support and resistance level is buying when price is closing in on the support level and selling when the price is moving closer to the resistance level. However, traders should wait for some confirmation that the market is still following the trend. Placing stops and limits below support and resistance levels is also recommended. It helps traders to choose a position quickly if the price breaks through levels of support or resistance. Before you place the trade, consider your profit target and what you consider to be an acceptable level of loss. Then decide on your exit points near the support and resistance levels. Another strategy used in support and resistance trading is the breakout strategy, whereby traders wait for the stock price to move outside either level. A breakout is not just a slight movement beyond the support or resistance level. It is defined by a particularly sudden and rapid movement with increased momentum, which creates opportunities of profit. I hope you found this video very helpful. Please like and subscribe my channel. Till then, take care of yourself.